Okay, so we're going to start off with some trading psychology today. First of all, big apologies. I haven't posted much this week, all right, because it's been busy, it's been crazy. Hence why I'm posting today, so that as you go into the weekend, you might be able to grab some dinner money. All right. Now, I had a student yesterday who I was teaching about trading and getting them to understand the market. And he said, TJ, I watched your last video about risking 1%. And I'm a beginner trader. I haven't got a crazy amount of money to put into trading. I work a standard 9 to 5 job. However, if I do risk 1%, it's gonna take me ages to become profitable. It's gonna take me a very, very long time. Sorry, not to become profitable. His words where it's gonna take me ages, all right, before I can quit my job. All right. So that's the goal for a lot of people to quit their job. All right. So what he says is, listen, I'm starting with, let's say, $100 as we spoke. And I was saying last lesson that you need to be risking $1 or $1 per trade. Okay, $1 per trade. That's not what we want. All right, so we need to be risking about $1 per trade. And he said to me, there's no point. I might as well just give it up. Well, the issue with this is risking $1 per trade, all right, it may not seem like anything. It may seem like, if you risk $1 trade, you're destined to be here for a very long time. All right. But what I will say to you guys, especially if you're a beginner and you're starting off with, $100, $200, $500, a grand, 2 grand, 3 grand, 5 grand, or maybe anything less than 10 grand. You're starting off with that. All right. Now, what I will say is, you need to understand that compounding, when it comes to trading, is a big thing. The power of compounding. All right. Even though you're starting with 10, or not 10, but $10 is quite low. But even though you're starting with $100, all right, that can very quickly turn into, you know, multiple thousands if you trade the right way. But emphasis, if you trade the right way. So what I said to him is, I whipped out this calculator and I said, all right, let's do a thought experiment. Let's do a thought experiment. Now, let's say you start off with $100, $100, £100, 100 rupees, wherever you are in the world. Okay. And you have a you know, daily return of, let's say, 3%. You're making 3% per day. All right. You're trading maybe 5 days a week, some people 7 days a week. You're making 3% per day. So not crazy, not unrealistic, 3% per day. Now you trade for 365 days in a year. All right. And that 3% per day that could just be one trade, a 3x trade, where your risk to reward multiply is 3. All right. Or you may take 4 or 5 trades to get that 3% in a day. You obviously reinvest 100% of your returns inside your trade, your equity. All right. So let's say you start off with $100. First trade, you make $2. All right. Your next trade is going to be 1% of $102, right? Now, are we trading on weekends? You know what? We're not trading on weekends because personally, I don't like trading on weekends. Why? Because the volume is atrocious. We're starting off today. Let's see how much we can earn by making 3% on $100. All right, over the course of a year using proper risk management and proper compounding. All right. So if we were to do that, all right, now this number is going to scare a lot of you, and you're going to think, what? If you were to do that within the space of 365 days, you would have made 400. Okay, no, not 400. All right. This looks like 4,847,768. That is what 3% a day for 365 days with proper compounding looks like. Okay, that is 4 million. Now, this is one of the problems of a lot of beginner traders. It's that you think, all right, if you start off with $100, you're going to be making millions. All right. Now, I'm not here to encourage you to have unrealistic expectations like that. I'm not here to do that. All right. What I am here to do is to say, hey, that $100, if you trade properly, will teach you all the lessons required, all right, to trade with $100,000, okay, or $200,000 or $500,000. Just what you learn trading $100 the right way, okay, is the same thing you will learn, all right, trading $100,000 the right way. If you have a system that works, how do we create a system that works? Well, there's a course for that, and there are one-to-one sessions for that. Now, 3%, some might say, man, 3%, come on, who makes 3% a day? That's too much. That's too much. All right, let's go 2%. 2% a day. You make 2% a day. Let's see how much you make after a year. You're about 1.3 million after a year. Okay? All right, now let's drop that down. 1% a day. You make 1% a day. All right? 1% a day consistently. Okay? Now there's a big gap there. 1% a day only gives you about 4 grand. Only gives you about 4 grand. Now that's not bad. That's not bad considering, right? Considering, let's say you work a 9 to 5 job, let's say you're an average wage, let's say you're like 40, 50K a year, perhaps. All right. An extra 3, 4 grand a year, that's not bad. That's paid for your petrol for the whole year. That's paid for all your, social events, all your, I don't know what your living standard is, but it can go a long way trading the right way. All right. So we can see the difference between 2% giving us about a mil, okay, and 1%, okay, giving us roughly around 4 grand. That is the power of compounding, guys. Okay, it is a very, very powerful, powerful, powerful idea in trading. Anyways, okay, so that's enough for today. Let's go straight into the charts and let's see what Bitcoin has been up to. Now, Bitcoin is in a very, very interesting place. Now, first of all, congratulations if you took the long that was given in advance. Now, towards the end of last video, we planned for a few longs, didn't we? All right, and congrats if you're in that trade. All right, because the chart has done exactly what we planned for it to do. And what was that plan? Let's take a look. Well, first of all, we said to ourselves that we have just deviated the range low. And because we have deviated the range low, all right, where do we say that? Blah, 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 blah. Where does it say that? Okay, so we deviated the range low. And then I said these are all assuming that we get a continuation pattern that follows this bullish break of structure. We're looking for a 10-minute flip and then we'll look to get in. All right. So this is where we were before that. Excuse me. This is where we were at that last video. Now let's take a look at what happened. We were looking at this 45-minute zone as the first point of engagement. Secondly, we're looking at this 1 hour zone and then this Fibonacci box, etc. Right? But Price did not have any time to waste. Price said, "I'm just going to get a little pause, get some juice from this 45-minute demand zone, and off I go." So trade number one would have been very, very nice. Now, even if you didn't even wait for market structure to flip there, all right, that would have been a very juicy play. Okay, so look at that. It just dipped into our zone and bang. Excuse me. It dipped into our zone and off you go. All right. So big congrats if you took that one. Let's do a quick risk to reward analysis on that and let's see how much money you would have made taking that trade. I guess what I should do at some point is do maybe like $100 challenge to see how much I can grow $100 from scratch. That would be an interesting one. All right, but anyways, let's see that trade and let's just do a risk to reward analysis on that trade. So entry, let's see, did we get a 10-minute flip? Now, as far as a 10-minute flip, let's see. So our 10-minute structure will look like this. Bang, bang, bang. Okay, so our flipping structure kind of took its time, didn't it? Yeah, kind of. We can't really call it a flip until here, really. Yeah, this is kind of where we got that flip and then that retracement. At least on the 15-minute. Let's see. Could we have had a better entry on, let's say, the 5-minute? I'm going to get rid of this for now. So on the 5-minute, as we come down, we have our structure looking like this. We've got a low. Oh no, this is after we've actually tagged our zone. Our zone's all the way over here. Sorry, guys. So our structure on the way down. All right, we get a low, a high, a low. All right, so we get a flip. We do get a flip. Okay, well we get a failed flip in the sense that if you entered off of this breaking structure here. Let's see, is it a break on a 10 minute? Okay, on a 10 minute, it's a break as well. All right, if you enter this break, off of this break, now you may have lost 1x. You may have lost 1x. Why? Because you would have got stopped out here. Okay, and then price came back down, all right, giving you new market structure pull. So low, high, low, high, low. And now it was this flip that did the job. It was a second flipping structure that did the job. So if we entered a long, we would have entered a long, let's say off of there. Put your stop loss down here. Okay. And let's see, you've already lost 1x. All right. So we don't, here we trade as we would in real life, right? We don't do best case scenario. We look at the worst case scenario as well. We've already lost 1x. All right. But we've lost 1x, and this trade we have just entered, okay, risking 1% again, is how many x? Is 10x. Okay, so you've just made 10x. So now you're up 9x, right? So what is 1x what is 10x? 10x minus that 1x that you just lost. Now you've got 9x, simple algebra. You see, when your maths teacher at school was like, oh, when am I ever, you got to learn algebra. And you were like, oh, when am I ever going to use this in real life? Well, there you go. This is trading and algebra, all right? But anyways, so yeah, that's a brilliant trade. If you're in that trade and you took that one, congratulations, well done. Free money came your way. So make sure you're spending it wisely. All right, enjoy yourself. All right, so now the question for me is, where's that next trade coming from? That's really all I care about. Where's that next trade coming from? And how are we going to play this? Well, we came down, we tagged this demand zone, deviated from our range low. All right, this being our range low. Now, we reclaimed market structure. All right, we haven't really had a nice bearish retest. Now, not just that, if we go on to the 8 hour, all right, actually, let's see the 12 hour. Now, on the 12 hour, we don't necessarily have structure here on this expansion leg down, but on the 8 hour, yes, no, we do not. We do not necessarily. No, I'm not going to call that real structure for reasons I cannot divulge here. All right, on the 18 hour, no, not necessarily. All right, cool. So the reason I'm doing this now is I'm saying, okay, can we have a higher time frame structure that's going to give us a bigger pullback before we touch this range high? Obviously, we know we have flip structure here at the range low, all right, which means the target for this trade, as we said last time, is all the way up there. Okay, this is the target. It's the range high. Well, yes, we're coming back towards the all-time highs. That is correct. Will we get there? We don't know yet. All right, but that's the target. What I'm trying to see is, can we actually get a deeper pullback before we get up there? That's my idea number one. So ultimately, I'm looking to see, can we do something like this, where we've had our impulse down, up, down, up, okay, down, break structure, this being your break of structure, a deeper retracement, okay, before we head up. All right, that's what I'm looking out for, and that's a potential POI, AOI, okay, that you should also be looking out for as well. So that's the continuation trade we're going to talk about in a second. Okay, we've got the continuation trade here. All right, could we get another continuation before we get to the range high? Now you have to ask yourself, is there anything here that's going to stop me at this point? Because we need something to stop price to facilitate that retracement. Okay, so again, we're going to spend some time looking after that to see if there's anything in there to stop us. Okay, now you could have entered a continuation here. You could have entered a continuation here because we had a little mini range. All right, now we could have another chance to get in for a continuation before we tag this high. All right, and you can think, oh, we're already close to the range high. Why are you still looking for longs? Well, based on a lower time frame, we could get a nice entry. All right, so what I'm going to do now is I'm going to spend the next 2-3 minutes searching and scouring these charts, all right, just to check to see where that zone might be. All right. So what I'm going to do now is I'm going to get rid of this drawing, okay, because it's kind of irrelevant for me now. We didn't really tag that breaker block that we were looking out for, so it's irrelevant now. This trade is done. There's no point leaving it on the chart. It's already done. All right, so we'll leave it there. All right, and also what I'm going to do as well is I am going to minimize these zones because it looks like it's not necessarily important in the short term. All right, we may come back to it, but right now I don't need to see that on my chart. Okay, so we're going to minimize these zones and then we're going to do some fresh TA. All right, also minimize this because we didn't really use it. All right, so my structure at the moment is low, high, low, lower, low, right? Breaking structure, then we'll come back for another sweep and then we break structure again, all right? This being our break of structure point. If this is our break of structure point, oh, I don't want that. It's a Friday, guys, so, you know, I'm a bit tired, but I thought, let me just pop this out there for you lot. All right, so if this is our break of structure, where is that retracement coming from? Well, that retracement can happen anywhere in this expansion leg. Okay, now in that expansion leg, let's see what the internal structure looks like. So I'm going to zoom in now and I'm going to say, okay, what's my structure on the way up from this expansion leg? It's been quite an aggressive move. But if I'm looking at the structure vaguely, it's a high, 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 low. I would say high, 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 low. And let's give this a high, high. Okay, so this would be my structure on the way up. Let's give it a thickness of 2 and we're going to make it black. Okay, this is my structure on the way up. Now, based on the structure, that retracement could happen anywhere here. The most bullish place for it to happen is simply for the retracement to happen somewhere in this zone here. Okay, why? The reason being, if it happens in that zone, it means we don't have to necessarily flip market structure. If it comes all the way down here, we would have flipped market structure before we get a retracement. All right, so that makes it less bullish. But the most bullish thing is to get a retracement in this box. Okay, that is the most bullish thing. That's on a 1 hour at least. Now let's see, can we get a zone that is worth our time? So what I'm going to do is actually, I'm going to make this box a different color. I'm going to call it a demand range. Okay, that's what it is, a demand range. And let's see if we can get some juicy zones in here, right? So look how quickly we're going to come up with some trades. We're going to say, bang, trade number 1 from that box off of that zone. And it's a 4 hour, oh, this is a 4 hour zone. We love a good 4 hour zone. 4 hour zones tend to work really well. All right, they don't come very often, but they do tend to work really well. If you want to back test that, feel free. All right, if you want to back test that, feel free. Okay, so that is a 4 hour zone, but it's a 4 hour demand zone. So we're going to call it a 4 hour demand zone. It's not a 6-minute demand zone, it's a 4 hour demand zone. All right, my templates are acting up today. So that's one zone. Now we've already mitigated this zone. See, I completely missed that. I would have entered a trade there. I completely missed that. But anyways, it happens. All right, let's see. Do we have any other zones? Okay, on the 2 hour, let's quickly check that, see if that was mitigated. On the 2 hour, that was all. That was a nice trade, honestly. See, today, that was a trade of the day, in my opinion, right there. Right there. Was it today? No, it happened yesterday. Yesterday afternoon. That was it. That was it. Okay, so we don't have anything on the 3 hour. Do we have anything on the 2 hour? Not necessarily. On the 2 hour, do we have anything on the 2 hour? Nah, nothing crazy. 45 minutes. You see, as I go down in structure, the price just it just becomes a little bit more stringy, not necessarily definite. All right, I think that's already been mitigated as well. Okay, so I'm literally doing this TA fresh. All right, so bear with me. You're gonna have to be patient with me here because this is fresh, live, raw TA that you're getting. Okay, so we do have a 30-minute zone there. Okay, but that 30-minute zone is lower than this last high low on the way up. Okay, so let's see on a 15-minute. Do we have anything on a 15-minute? Okay, so nothing crazy, right? Nothing. Oh, yeah, we do have this on a 15-minute. That's on a 15-minute that we can potentially get a reaction from. So I'm just going to label that in. Because why not? Why not label it in? All right, so on a 10-minute, do we have anything on a 10-minute? All right, so on a 10-minute is where I'm going to stop here because look, the price action is just way too stringy for me, at the moment. All right, so we're going to stop there. These are our key zones. We're going to look for longs at these zones. So zone number 1, zone number 2, zone number 3, and zone number 4. So these are longs in the instance we are going to get a retracement, okay? In the instance, we're going to get a nice 4-hour retracement. Is it a 4-hour? No, it's not a 4-hour. Like an 8/12 hour retracement. Yeah, if we get an 8/12 hour retracement, because we've obviously had a move down, we've had a break of structure. If we get a retracement, that could happen at any of those zones. All right. So what am I going to do next? I'm going to put alert there number 1, bang. All right. I'm going to put alert number 2, bang. I'm going to put alert number 3, bang. And then put alert number 4 as well, bang. Now, ideally, I want to see 1 or 2 work. Don't necessarily want to see 4, really. Why? Because, the moment we start seeing 4, the deeper and deeper we get, the more likely we have a chance for an actual reversal. Okay. Now, that reversal that we were talking about, where could it occur? Well, I think it could occur somewhere here if we are to get it. Remember, trading is all about planning your trades and trading your plan. So let's take a look now. Let's time travel. We're going to go back in time and see, do we have any potential zones where we can get a retracement? I think we have a zone here. It's not definite, but we may have already purged through that zone. Okay, but I'm going to quickly go 4-hour. Anything on a 4-hour? Nope. Anything on a 3-hour? Nope. 2-hour? Anything on a 2-hour for us? Nope. Anything on a 1-hour? Not necessarily. Anything on a 45-minute? Oh, yes. We do have a zone on a 45-minute, guys. We've got a 45-minute block there. All right, if you're not sure what I'm doing here and how I'm drawing out these blocks, now this is a very key part of trading the way I do, which is using a confluence with blocks, market structure, liquidity, and some range concepts. That's all I do. That's literally all we do here. All right, so do we have any other blocks? No, not that I can see. I'm going to go down to the 5-minute here. I'm not going to do anything lower than the 5-minute because, is that mitigated is the question. So I'm looking at this zone here and I just want to check if it is mitigated. And one quick way to check whether a zone has been mitigated is to look at the lower of this bar. So the lower of this bar is 392. Look at the higher of this bar. The higher of this bar is 396. 396 is above 392. So that says that zone has been mitigated. Right. Also, this 12-minute zone is one to watch for. We're going to stop there. We're going to stop there. Now, if I'm not saying we can't have a smaller time frame zone that works, we definitely can. But am I interested in it? No, I'm not. And if it happens and it works, that's fine. That is fine. I'm just not in the mood to trade 2-minute zones this weekend or next week. All right. Now, let's get back to the live charts. So we've time traveled. All right. So this zone is gone. We don't need this zone anymore. All right, but we are approaching this 45-minute zone. Now, this 45-minute zone and this 12-minute zone, they are, in my opinion, the only thing stopping price from reaching all-time highs. All right, so are we going to get a reaction from the zone, or you're yet to see, or are we going to get a reaction from the 12-minute zone we're yet to see? And when I say reaction, what do I mean? I mean on a lower time frame, let's say a 10-minute, 15-minute, is price going to come up, tag the zone, flip structure, retrace, and continue? That is our confirmation for a trade. We enter there, we put our stop loss here, and we drive it down. All right, that would be nice. Look at that, 23x trade. Okay, that is my confirmation for those of you wondering how to enter that trade. Now, usually you will get those flipping market structure with divergences. So if you trade RSIs, you will be expecting RSI divergence. If you trade moving averages, you'll be expecting a moving average crossover. If you trade, what else is out there? If you trade MACD, if you trade Onko whatever you trade, right, you're going to be seeing the same thing all indicators point to the same thing, market structure. Okay. So those are my longs. These are my shorts. And that's it. That's all I'm really here to say. So I'm just gonna put the actual setups here. Oof, that is one big stop loss. Okay, so even if we get a retracement, that's a nice trade. 5x, 5% on that trade. Not bad. Is it worth taking? Of course it is. What about this trade? If we were to retrace all the way back down and we target, where would we target? Well, we'll target our last high. What's that one? 3x. Is that worth it? Of course it is. All right. So these are the trades I'm watching out for. All right. Now, you have to bear in mind, guys, it is Friday. We've got a weekend ahead. All right. Usually, weekend price action is pretty boring, as we can see here. Now, you can backtest these ideas. Let's look for the last weekend. Look, Sunday, it was a range. All right. But we did get a drop on a Monday. Look again, Sunday, boring range. Look at that, was all the weekend. Boring range. Let's look at the week before that. Again, look at that. Boring. Boring. Look at that price action. Boring. I'm guessing this was a weekend as well. Okay, all right. This one, yeah, kind of. Not much. Tiny little drop. All right, so we do tend to, just chill on weekends. So just, be aware of that. Okay. I won't be surprised if price decides to just come up here, range for a bit for this weekend over here. And then, Sunday afternoon, decide to pop off, break in structure, or pop down for that retracement. All right, that's kind of what it could do. But we'll leave it there. Let's just show our shorts as well. We're going to show the shorts. Show the shorts. So we've got a short there. We've also got another short from the range high. It's the same ideas, guys. All right. So that's kind of it. Now, if you found this useful, don't forget to hit follow, hit subscribe. Hit me up on YouTube. Hit me up on, where else am I? Hit me up on Discord. If you're looking for one-to-one lesson, let me know and we can sort you out. All right. Hope you have a great weekend wherever you are in the world, and I'll see you next time.